Hi, my name is Bruce Anderson. I'd like to introduce you to the topic of 179 expense deduction. 179 expense deduction is available for any business activities or investors that have property. This is going to be for personal property. The interesting thing about 179 expense deduction is it gives the purchaser of equipment the opportunity to kind of throttle the way in which they're going to use this expense deduction. Typically, if you're going to buy, for example, a piece of equipment, $100,000, could be $20,000, you then have a question of, do you expense it off in 1 year, which is a 179, or you take a traditional depreciation schedule, which is going to take you out for a few years, maybe anywhere from 3 to 5 to 7 years, typically for this type of property. What's interesting about the 179 is that you can take a look at your tax situation, take a look at your tax liability, and potentially expense off either 100% or a portion of the 179 expensed property. So in this case, if you decide through planning your tax liability is maybe in the $20,000–$25,000 range, and you've acquired a piece of equipment that is in the $100,000 range, then you might choose to go ahead and zero out your tax liability for that year. Oh, but wait, you could go ahead and take a look at a minimum tax rate and say to yourself, look, things going into the future are going to be with a higher tax rate, so let me go ahead and take a portion of that net tax liability and expense it off through 179 and keep yourself into the lower tax bracket, but not get you to zero. So those are the kinds of things that we can help you with at Andersen CPA. So feel free to give me a call, contact me through email, or pick up the phone, and let's talk about your tax situation. Thanks very much.